Dark clouds ahead for Singapore. A warning from Prime Minister Lee Hsien Loong in his National Day message. PM Lee says shifting international economic conditions mean the world is unlikely to return to low inflation levels and interest rates anytime soon. He also highlighted the need to be psychologically prepared, as the region may not be as peaceful and stable in the next few decades. Heidi Ng has more.
Calling COVID-19 the test of a generation, Prime Minister Lee Hsien Loong says Singaporeans have held up through the trial and emerged stronger and more united. He says this unity will put the nation in good stead when dealing with brewing storms brought on by geopolitical tensions.
It's the only way to deal with challenges in an increasingly troubled world. We must look to our total defense and maintain a strong and credible SAF and home team. We must also brace ourselves and be psychologically prepared that in the next decades, our region may not be as peaceful and stable as it has been thus far.
But more pressing, he says, are the economic challenges that came with the pandemic and which were aggravated by the war in Ukraine. Mr. Lee says the government is doing everything necessary to help Singaporeans cope with the rising cost of living. This includes targeted support packages as well as strengthening the Singapore dollar. He adds that the government is ready to do more if things worsen, but Singapore will ultimately have to transform to keep up.
The basic reality is that international economic conditions have shifted. The world is not likely to return anytime soon to the low inflation levels and interest rates that we have enjoyed in recent decades. Singapore's deeper response to this shift must be to transform our industry, upgrade our skills, and raise our productivity. Then our wages can go up higher than inflation, and Singaporeans can earn more in real terms, year by year.
Aside from these immediate challenges, he says it's also important to make long-term plans. Speaking from Gardens by the Bay, Mr. Lee cited it as an example of a project which took decades to conceive, design and build. That's because the government wanted the new downtown to have a mix of offices, homes and at the heart of it, an iconic green space for all.
This is how we do things in Singapore. Always daring to dream, setting our sights on the next frontier and searching for better solutions and fresh possibilities. We look and plan ahead, not just for the next 5 or 10 years, but for the next 30 or 50 years and beyond.
Wishing Singaporeans a happy National Day, Mr. Lee also invited them to contribute ideas to the Forward Singapore exercise, launched by Deputy Prime Minister Lawrence Wong and the 4G leaders, to refresh Singapore's social compact and to chart its way forward.
To shed more light on Singapore's economic challenges in the coming quarters, we are joined by Sumit Agarwal, a professor of Finance, Economics, Real Estate at the NUS Business School. Professor Sumit, the Prime Minister certainly not attempting to sugarcoat the situation, giving a big caution, isn't it, of these days of low inflation and interest rates being a thing of the past.
I agree with him. Look, we have enjoyed low inflation and interest rates for the last 30 years around the world. And now, for various reasons that PM Lee pointed out, especially COVID, supply chains, and many other factors have caused inflation to be on the rise. While over time, we will see inflation to come down, but we will not see it to what we enjoyed for many, many years, where our interest rates were 1%, 1.5%, almost negligible, and we were able to buy houses or other cars and many other durable goods at almost no interest to pay. I think those days are over. I have no doubt that he's right on that front.
Well, since it is a whole new world out there, let's start first with the businesses. How can the Singaporean businesses chart a path through these new realities and the higher Singapore interest rate to boot?
Yes, it's not going to be easy. Look, one of the major input costs is petrol or gas. And that is something that Singapore needs to import. And if prices of that are higher, that affects every part of the small business or business cost. While we have seen in the last week or last few days prices come down, they're still not going to come down to where they were. So businesses have to think about export-oriented products rather than import-oriented products, where they're going to incur additional cost and that will eventually be passed on to the consumer. So they have to be intermediating and thinking about how do I turn it around and export it to make money out of it.
You know, the Prime Minister also called for a deeper response from Singapore. What does that look like as part of the transformation that needs to happen, both in the short term as well as the long term?
So I think in the short term, productivity has to go up. We have to rely more on mixing technology with labor. That will actually raise the wages above the inflation. I mean, I'm just echoing PM Lee's points here, but I think he's spot on that we have to increase productivity. In the long run, we have to worry about sustainability. And this is where Singapore is doing a lot, is trying to not just worry about the raise in productivity or the short-term gains, but also relying and making Singapore safer and Singaporeans safer for the longer-term economic growth of the country. Like they have plans for the next 100 years of what would happen if sea level rise happens in Singapore and how to protect that. And just a few years ago, PM Lee had announced investing $100 billion to protect Singapore against those eventualities. So that kind of tells you the short-term and long-term strategies that Singapore needs to kind of weather these short-term issues which are related to inflation, but long-term issues which are related to climate change. And I think this is where the focus has to be for the country.
What about the men on the streets, Professor, who are being buffeted by rising costs of living, inflationary pressures top of mind? How can they possibly navigate and weather this road ahead? What would that look like for the average person practically?
Yes. I mean, look, house prices are going up. People are really diving and buying houses right now. That tells you that the interest that they will have to pay to service that mortgage will be going up. So the debt service burden on the average consumer over time will be going up. And that's the biggest asset they will be holding. So I would say to people, be cautious. Don't need to buy a house right now because you think, oh, there is upside on buying houses and these house price. Why am I sitting outside the market? If I was in it, I will make a lot more money. But remember, interest rates are up, debt service burden will be higher, and who knows if you'll be really able to pay it. So the man on the streets needs to think about, how do I save money right now for the rainy days, for these tough times that I see ahead, as PM Lee pointed out. And there will be some tough times in the next 2 to 3 years before which we start seeing inflation to subside a little bit and things to look slightly more comfortable.
Professor Sumit Agarwal, certainly taking some of that advice to heart. Thank you so much. He is a professor from the NUS School of Business.